Hi guys, welcome to my channel. My name is Hugo and today we're going to see what's going to be the best stocks for this week. We're going to do analysis on the 7 stocks that we see on the screen, and we're going to do as well an analysis on the Bitcoin and SP500 and also on my portfolio. So stay around. Before we start the video, please don't forget to hit the subscribe button. Only 6.2% of my viewers are subscribers, so don't forget to smash that button. So let's get back to the video. So we're starting the week with the smallest dividend yield into the biggest dividend yield. We're going to do analysis on 7 stocks, and the first one is going to be the CSSO, Southern Copper Corporation. So this is a company that is focused only on the copper and mining, and they have a dividend yield of 5.54%. They pay quarterly, February, May, August, and November, and they are overvalued in 15.5%. So I think this is not the greatest stock that we have for this week, because we have here overvalued over around 15%, and the margin to grow is not quite good. The ex-dividend date is going to be on August 11th, and the financial health is a G, so they have more assets than liabilities, and it's around $1 billion of difference between liabilities and assets. And the market sentiment is old. As you can see on the graph, they went down quite a lot in the past few years. This could be a good stock to buy, but not now. I do think they're going to go down a little bit more because of the earnings growth around 132% last year, and I'm assuming this is going to fall a lot during this year in the next 3 coming years, and that's why they have an earning forecast decline, which is going to be around 2.1% in upcoming 3 years. The ticker EVA in Viva Partners LP, they have a dividend yield of 5.82%. They pay quarterly, February, May, August, and November, and they are undervalued in around 59.1%. Bear in mind, they are undervalued quite a lot. This is actually a really interesting stock, not because of the dividend yield, but because we can see here a really grow stock, so we can combine both. For one simple reason, because they have an estimation growth of around 139% for the next upcoming 3 years. So this is a really interesting stock because they can grow a lot and they are undervalued in 59%. So I think this could be a really interesting stock to buy right now. The ex-dividend date is on August 12th, and the financial health is G, it's good. So they have more liabilities than assets. It's around 2 billion around between assets and liabilities, and we have a market sentiment of a buy. They are in the energy sector where they mine coal and consumable fuels. And this could be an interesting stock. I don't know if it's going to be an industry with the future. Of course, it's not going to be an industry with future with the new renewables that are coming in the energy sector. But for a short term, for at least 2 quarters or a year at least, it could be really interesting because we have a really interesting growth. At least if you don't want to buy, it could be a really interesting stock to have on your watch list. The next stock with the ticker ENB, Enbridge Inc., they have a dividend yield of 6.71%. They pay quarterly, February, May, August, and November, and they are undervalued in around 20%, 20.5%. The ex-dividend date is on the 12th of August, and they have a financial health of a B. Although the difference is not quite a lot between liabilities and assets, it's around $500,000 per se. So it could be interesting, but still they don't have a good financial health. And we have a market sentiment of a buy. But bear in mind that we had a lot of stocks in the energy sector, and a few I've already mentioned last week that have a higher dividend yield than this one, but we still have another one quite interesting that I'm going to show you in a few minutes. And the earnings grow around 88.5% last year, so we're going to see a decline on the future growth of this company, which is going to be around 15.4%. So bear in mind that we're going to have a negative future growth on this stock. The ticker XOM or ExxonMobil, which has a dividend yield of 7.26%. This is actually one of the highest dividend yields that we have in terms of petroleum. We have also Chevron, we have also BP, and Exxon is one of that are end-to-end with the other stocks with a similar dividend yield with 7.26%. They pay quarterly, February, May, August, and November, and they are undervalued around 28.4%. So it's still a good stock to buy because they are undervalued, and the ex-dividend date is on the 12th of August. The financial health is a B. They are not quite good in terms of financial health, but there's not much of a difference, and we have a market sentiment of a buy. As you can see in the graph, we had a correction in the past few weeks or months, and the XLE, the ticker XLE, which is an ETF, it's combined all those stocks, had a quite impact with around a 12% of correction, where this was also affected. So that's why you can see this volatility on this graph. They went up in the past few weeks, and I'm assuming they go up as well, and as with the increase of petroleum as well, the gas, at least in Europe, the diesel and petrol went up quite a lot, with around 2% or in certain cases much more. So we have a lot of growth, and they are estimating earnings to grow around 11% for the next year. The ticker BP.L, so it's a UK stock with British Petroleum, have a dividend yield of 5.14%. So besides we having here dividend yield of 5.14%, this is actually quite higher than Exxon, because Exxon after tax is going to be around 5.08%. So it's actually lower than this one, because we're going to pay 30% of tax because it's on the US market. And this one doesn't pay because it's UK market, and we don't pay any kind of tax. They pay quarterly, February, May, August, and November. So they are overvalued around 29.1%. I don't think I'll go for this stock for one simple reason, because the earnings are forecast to decline in around 4.2% for the next year. So if you want for a quarter, but at least this is not a good option for now. I'll let it go. For BP, I'll let it go at least until they are undervalued, and then I can gain from some dividends. But for now, if you already have the stock on your portfolio, that will be nice. But if you don't have it, I'll put it on my watch list, and then buy in the future as soon as they become undervalued. And I'm thinking, actually I do have BP, and I'm thinking that's with 4% of forecast decline, I think I'm going to sell in the next upcoming weeks or months. Let's see how the things goes. The ticker RIO or RIO.L, which is Rio Tinto, has a dividend yield of 8.08% and 8.16% on the UK market. So in this case, bear in mind that this 8% on the US market is not going to be actually 8%, is going to be around 6.5%, something like that. And the UK market is going to be actually 8.16% because of the tax. So if you actually want to buy this one, besides being not quarterly, this is a biannual, and they only pay on March and August. If you want to go for this one, I'll go for the UK market instead of the US market because of the taxation. Bear in mind, this is only biannual, but in terms of compound interest, if you're going for a stock with a quarterly payments, if it's going to be around 7% as a compound interest, that's not going to pay you as much as this one, which is going to be 8.16%. I don't have on my portfolio because usually I miss the ex-dividend dates, and that's why I don't buy. So this is one of the reasons why I don't go for this stock, but they actually are quite great, and they pay a really high dividend yield if you go with the UK stock. So regarding the company, so they went down quite a lot in the past few weeks, and the financial health is quite good. They are in a diverse mining, copper, and all kind of metals. They are quite huge worldwide, and they have a really nice financial health. So the market, and as you can see, the market sentiment is a buy. So I think this is a really nice stock to have on your portfolio, and they went down quite a lot in the past few weeks. Actually, I'm thinking in buy Rio Tinto in the next upcoming weeks or so, probably before the ex-dividend date, of course. But bear in mind, they grow in terms of earnings in around 160% in the past year. So we're going to see a decline in the next 3 years or so, which is going to be around 37% for the next upcoming 3 years. And this probably it's one of the causes why the stock went down quite a lot in the past few weeks. I didn't saw the report earnings for this stock, but if you want to go for it, bear in mind that they're going to the future growth of this stock is going to be minus 37% for the next upcoming years. If this dividend yield of 8.16% is going to justify the decline of earnings in around 37%, I don't know. It's something that you need to do your own calculations. ARB, Arbor Realty Trust. This is a quite similar stock that I have with Main and AGNC, which is a mortgage REIT. So they pay a dividend yield of 7.64%, which is quite good. and they pay quarterly February, May, August, and November. They are undervalued in around 7.6%. Is not much. I'll probably wait for them to go down, and the ex-dividend is going to 13th of August. The financial health is 3Gs. They have the greatest financial health of all the stocks. They have a 7 billion of assets, and in terms of liabilities, it's around 800 million of liabilities. So they are really good in terms of financial health. They grow around 483% in the past year, and they have a lot of cash flow. So I'm assuming they're going to grow a lot in the next upcoming year. But they only forecast have a growth of around 3%. Is not much. And having in consideration they are only undervalued in around 7.6%, I don't know. This is something that we need to balance between the undervalued of 7% and the growth of 3% that we're going to have. But although with all this, the market sentiment is still a buy. Other stocks for this week, we're going to have Walmart with the ticker WMT, which is going to pay a dividend yield of 1.51%. I think they reduced the dividend yield of this was around much higher, around 1.7, and they reduced the dividend yield from the past quarter, and the ex-dividend is going to be on August 12. So now let's do a market analysis of the SP500 and the Bitcoin. So doing analysis on the SP500, we're going to see that we had a growth of around 0.4% in the past week, and probably the next week we're going to have a negative Monday. I do think Monday is going to be a negative because of the MACD. It's going to show you here already a shift for a bearish market, and I do think the Monday is going to be a negative. We're probably going to for the $4,420. I do still think that until the end of the week we're going to test another support of around the $4,470. So one of the things that we need to be careful is the tendency of the MACD, if it's going to be a bearish or a bull market. And one of the things that makes me some concerns is the moving average is really quite low, around the $4,300, and I'm assuming we're going to reach this point in the future. Not for now, but this is quite low in the past weeks. Bear in mind that the volume is also reducing. We are reducing the volume, so this means that we may see a decline in growth. As you can see here, in the past we had quite a lot of fluctuation and we had a lot of volume during this period. Here we don't have too much of a volume. Actually, we are almost in holidays. Most of the people are on holidays, so we're going to see not a big growth. We're going to see probably the next week is going to be exactly the same thing. I'm assuming we're going to have something like this as we had in the previous month. In terms of the Bitcoin, we're going to continue to see continuous growth. We have here a MACD which is going to be bull for the next week, and we already test and we already pass the support of around the $42,500, and we're going to reach the 50,000 probably in the next week. Let's see if we're going to continue this growth. Again, the volume is starting to increase from the previous weeks. We see here that the volume went quite low in the past weeks, but now we are seeing much volume in terms of the Bitcoin. We are starting to move again, and that's why I'm thinking we're going to see to reach the 50 grand. That's probably is going to be the next support to run here, taking into consideration that the support in April was around the 50 grand. We still have here the average volume, so it's going to start to grow, and as you can see, it's now starting to grow for the next week, and we probably see something reaching like this point to the 50k. Bear in mind, if you reach the 50k, we're going to have a lot of ups and downs there, because we're going to test the support on the 50k again. So if you want to copy all my trades, you can go to eToro and you can search my nickname Kenite, and you can copy all the trades. I recommend you to copy all my open trades so you can have the maximum of from the dividends that I collect every single month, and you'll get the most from copying all open trades instead of the open orders that I have. If you want to copy, I recommend to copy with around $1,000. Of course, you can go for $500, but most of the copies probably won't be happen because of the volume that I have, and those probably won't be copied. But this is something that you need to have in consideration, and you won't get too much of from those dividends. Of course, more you invest, more you gain, but more risk you have there. And you can check all this at the end of this video, where I'm going to show you the actions that I have done during the past week. So my portfolio performance for this week, growth around 0.45%, where the market growth around 0.4%. Profit since inception, we had around 12.11%. Bear in mind, this doesn't take into consideration all the sells and buys that I've done, only in terms of the margin that I have on profit on the existing stocks, not all the stocks that I've sold and happened. Of course, I'm going to show you all these results more towards the end of the year, where I can show you how much my portfolio has grown in terms just in dividends. In terms of return, my portfolio in the past few 12 months have a return of around 29.23%, and the top dividend stocks are going to be BP, which have a growth of 6.31%. Bear in mind that they only had this growth because of the past week the petrol and the diesel had increased in the European market, and this could be one of the reasons, and also that the ex-dividend date is going to be this week. So that's why we have two things here that could be the cause of why this stock went so high. Pfizer had the increase of 5.28%, where the vaccination is still rolling and more vaccines are being requested, so that's why also had an increase. Principal Financial Group had an increase of 4.39%. International Consolidated Airlines had an increase of 3.18%. As soon as the European market has opened doors for more flights, they had an increase as well. Bear in mind, this is a consolidation airline that contains some of the French airlines and UK airlines. And as soon as UK opened doors to other countries, when they went down from amber to green, they started to fly to those countries, and that's why they had the increase as well. Berkshire Hathaway had increase as well of 2.64%. Bear in mind, they buy back some shares, and that's why they had the increase of 2.64% in the past week after the report earnings. In terms of actions during this week, we had payments only AT&T, which was a big chunk of money because I have a big, around almost 5% of my overall portfolio. It's AT&T, and they pay a lot. So we have a big chunk of money coming in just on AT&T this week. We had new acquisitions, NVRO, and one of the reasons why I went for NVRO was because they went down around 23% in the past week. There was some fear from the stockholders where they didn't comply with the growth estimation, which was around 1.36 billion in earnings that they reported, where the estimation was around 163 billion. I think this was the reason why we have a sell-off on this company in terms of shares. But after a deep analysis of the company, they are quite well in terms of financial health. I've given them 3 Gs, so they have more liabilities than assets, quite a lot. Almost liabilities none, and the future growth is around 60% for the next 3 years. So we have a lot of growth here. We went down quite a lot. They are still undervalued in around 12%. So I think this was a really nice time to get in this stock. And as soon as I bought this stock, they went up around 5%. So as you can see, that was quite good. One other open order that I have is ITRI. This is for the same reason. They went down around 25%. In terms of financial health, they are quite good. The report earnings went well, as good as the estimations, and the stockholders had a sell-off as well on this stock. So that's why this is one of the stocks that I wanted to try to get in as well, because they have a really nice growth, and they also are undervalued a lot. So this is one of the stocks that I still have as open ordered. If I'm going to get in, I don't know. I'm going to put it a certain value. I didn't went crazy. I just want to get in at that specific value. If I don't get in, that's fine. There's going to be more opportunity or any other stock to get in and get some increase on my portfolio. This is one of the reasons why I wanted to buy those kind of stocks. They are growth stocks. They are in a lower market cap, and we have a lot of growth here, around 60% in each of them. So, and this will give me my portfolio some momentum and some growth. That's what I need at the moment, which at the moment my portfolio is only around 7.7%. I want to give a little bit more. And I didn't want to go to any of the other stocks, Corsair, Palantirs, etc., or Robinhood, that has a higher market cap, and they'll be more affected by external factors than these ones. In terms of closing orders, we have ARC and AMZA with around 20% and almost 28% of profits in those two stocks. I didn't sold all of them. I just sold a few parts of the stocks, around 25% on each, where I try to get this money to do some average and also acquire new stocks. The averaging that I've done this week was SDIV, AMZA, ET, XLE, which went down quite a lot, QILD, Amazon, and Alibaba, where Amazon went around 7% last week. So those I got that money to invest and do some average here, which was more important, and I still got profit from that. In terms of the top payers, we had a shift here from the previous week, which was AMZA, and now we have ET, Energy Transfer, with the top payers. In terms of the top dividend yield, is still QILD with 11.8%, and my portfolio is now undervalued in around 45.2%. The future growth had increased of 1% from the past week to this week, from 6.6% to 7.7%, and the stock with the highest volatility is still Main, and the lowest volatility is still Unilever. So now let's have a look into the spreadsheet. So if you're seeing this spreadsheet for the first time, bear in mind the link is on the description, and I update this spreadsheet every single time after the market close on the Friday. And here we have the information regarding the new stock that was paid, which was here August. We have TNT. We also have here the new acquisition, which is the NVRO. Of course, they don't pay any dividend because they are a growth stock. We can order this by annual dividend yields, and here we can see the highest dividend yield into the lowest dividend yield. We can see also here how much we can invest in a copy. So if I invest $5,000, how much I'm going to receive per month is going to be mentioned around here. So I'm going to receive around $15 per month, which is going to be around $150 per year. Of course, the more you invest, more you're going to gain. Now we do have this stock here as a grow. We have a few grow here. Probably I'm going to sell gold. It's not being performing quite well as much as I wanted. Probably the next target that's going to be sell it's gold. I'm hoping to get some profit here, around 10% profit. I'll be fine with that, and probably I'm going to sell and reinvest in other stocks that I already have to increase not only the average dividend yield but also my returns in terms of investment. So you can copy this and you can simulate by changing here the average of that you have, or when you copy me, you can copy, put those values over here, and they'll give you how much you're going to get in terms of shares, how much you're going to invest, how much you have invest in terms of value. Of course, this is calculated based on the actual market value, and then you're going to have here the how much you're going to receive per month in each month. And here in this graph you can see that we had some changes. So in terms of balance, we have some change from the past week. In terms of ETFs, we still have around the 55%. We have increased here on the US stocks because we bought new stocks from US. UK is still the 9.5%, and China had increased because I bought again Alibaba because I want to buy on the dip. So we have an increase here. In terms of cryptocurrency, we have a decrease of around 4.7% from the previous, which was 6%. So this is now the distribution, the new distribution of my portfolio after all the changes that I've done in terms of sales and new acquisitions that I've done, an average that I've done during this week. So guys, I hope you enjoyed this week tips. Don't forget to hit the subscribe button and the like. This will help me a lot because bear in mind, this takes me a lot of time to do investigation and put all this information together, and I'm not getting anything from here. This is all free information that I'm giving you guys. So at least I hope you hit that button, smash that button, and once again, cheers and see you next week.